Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for another week of market recap. We actually took a week off last week, Bruce, with the long weekend last weekend. So we're 2 weeks we haven't been able to do this. So I'm excited to be back with you. You're joining us with my wonderful co-host Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, it's good to be back after a couple of weeks off. Seems like forever.
It does seem like forever. Absolutely. Well, last week, I don't know what was going on in your part of the world, but in my part of the world, the BC long weekend is probably one of the biggest weekends of the year. And especially because people can't travel as much, it was complete mayhem around here. I sat in my backyard and hid.
Wow, that sounds like fun on the
Yeah.
BC Day long weekend.
Well, I think it's pretty busy where you are, isn't it?
It was, it was crazy here between the tourists and the smoke. It was epic.
It was epic, yeah. Well, listen, there's lots to break down. We're gonna dive into it. We're gonna talk about ADP payrolls that were released last Friday. You're gonna tell us what that is and what that means. And then this past Monday, non-farm payrolls were released and what that means. We're gonna dive into some market sector review, and then we're gonna talk about a few big transactions that occurred. Score Media and Gaming, which is a Toronto-based company, sold to Penn in a US $2 billion deal. We're gonna talk about that. Robin had its first week of trading. Of course, we're going to talk about that and what happened. And then, of course, a bunch of great CSE issuer news, even a celebrity sighting this week that we're going to talk about. So why don't we start off? ADP payroll was released Friday. Non-farm payrolls were released on Monday. What are those things and what does that mean? So
actually, the ADP was released on Wednesday of this week, and that non-farm payroll is released today. And so what was interesting is that, sort of the, again, binary idea behind the markets and what they saw. So ADP is a private payroll provider. And so because they do so many paychecks around the US, they provide their own data each month. And quite often that number coincides with what the non-farm payroll government data looks like. And so when the number came out on Wednesday, it was a big surprise. And so what that meant was the Dow and the S&P both sold off, the NASDAQ went up, and rates went down. Why? Because the thought was that, the Fed's not going to taper, and rates going lower is good for technology stocks. Maybe we're going to see slower growth, and that would be good from a Fed perspective. Today, the numbers came out from a non-farm payroll perspective, and they actually were quite strong, stronger than the market expected. And so we saw the number for July, which was stronger than expected. And then we also saw the numbers for the last 2 months get revised up as well. And of course, today, we're kind of seeing the opposite of what we saw on Wednesday. So now we're seeing rates are up a little bit. We're seeing the Dow and the S&P positive, and we're seeing the NASDAQ down, and we're seeing gold down. So it's a bit of reversal of fortune from where it was Wednesday, and it just shows you kind of how binary the market is. It's kind of one or the other. It's we're growing or we're not. We're staying at home or we're removing restrictions. So it's been a really difficult environment for the last probably 4 months here for investors.
Crazy. Okay, let's talk about market sector review. What's happening?
Yeah. So along the lines of being crazy for the last 4 months for investors, sector rotation continues to really churn. And, we've done this for a number of years now, and I don't remember seeing this type of market churn as far as sectors go. And so, if you kind of look at the year where we started the year, where we are now, we came into the year, we saw, technology, we started to see financials and some of the materials really picking up. They really topped out in sort of that June timeframe through July. June and July, they kind of sold off, and now we're starting to see really a barbell almost approach. You're seeing industrials at one end starting to show relative improvement, and this is looking at the RRG here, a relative rotation graph. You can see that utilities is starting to improve and moving into the leading quadrant. At the same time, you're seeing technology and industrials, and then the consumer staples as well. So you're seeing staples and utilities, which are thought of as being more defensive. At the same time, you're seeing industrials and technology, which is on the opposite end of the spectrum. So very challenging for investors, and obviously trends that we keep watching here. One of the things that we, because we have our own proprietary work that we do on asset leadership, and what we talk about right now is that kind of based on where everything is, we're still positive on the markets, but we're kind of one step down with almost neutral positioning. So we do have a bit of that barbell approach as well. And what we're watching for right now is if we're going to start to see a reacceleration in some of the breadth data. If that's the case, then we'll start to see investors looking down cap again, and we'll see the small and mid caps starting to accelerate. We're starting to see that in the US already. The mid caps are starting to accelerate, but we haven't really seen a whole lot of follow through yet in Canada. That being said, depending on kind of where economic data and lockdowns go, we could actually tilt the other way, and that's why you're seeing utilities and staples and technology and industrials sort of on opposite ends of what you would expect in a portfolio, both doing really well right now.
So it's just hard to tell what's going to happen, right?
Just very mixed. And I mean, obviously this summer with lower volume and seasonality of being weaker seasonality, sort of August, September, first part of October, kind of all throws a lot of cross currents in there. So it's a challenging time for investors.
Absolutely. Okay, let's talk about this big transaction that occurred in Canada this past week. So Score Media and Gaming is a Toronto-based company. They were purchased by Penn National. The agreement was a US $2 billion deal that was paid out in both stock and in cash. The Score, which is owned by Score Media, is the number one sports app in Canada and the third most popular in North America. This is I had never heard of this guy before, or this app before, but it's probably the most popular out there. News of the deal this week took the stock, which it trades on the Toronto Stock Exchange. It took it from $14.69 to $32.83, which is almost an 80% climb. So obviously the market really liked this deal. And don't forget, we talked about this last month, that the bill just passed in the Senate, Bill C-218 passed in June to allow in Canada, that move towards legalized single event sports betting. And that, so it makes sense that we're starting to see some of these deals come through. What do you think about this deal?
Yeah, I mean, we have talked about the gaming side of things. And I mean, you saw exactly what happened. Penn Gaming's been watching as, Score's been working on this. First off, they had, if you sort of go back in history, they had, television station, right? Which was the Score, which was sold. And then the founders of the Score spun out the app division, which, was going to have its own model. And then they have been morphing it, moving it towards gaming. And now obviously with the gaming licensing changing in Canada, Penn just said, okay, here we go. And obviously with them being the biggest app, they're going to, potentially have the most follow through of people who go from, watching sports and betting maybe somewhere else to betting with their app, right? And driving that top line revenue to them. So obviously a big deal. It means a lot, obviously, for the other companies in the sector. And we saw that yesterday when the deal was announced. We saw a number of those companies have fairly strong days from a performance standpoint, because, now investors take a look around and say, well, based on the valuation that was just paid, should we be looking at other companies? And obviously they also rotate that money knowing that they're going to get taken out by Penn. Then they look, kind of what's the next opportunity, the next one in Canada. And I mean, there's tons of companies on the CSE, on the venture, and even on the TSX that trade in this sector. So it's brought about a new life back into some of those companies.
Well, and I stand corrected. We have that up there. That's the current price as of it now. So it's at $14.69 before the announcement. Once the announcement came, it's now trading at $41.89. I mean, that's a huge jump. And I think, these are really good opportunities for us as a sector. I mean, obviously the gaming sector is a moneymaker. But what I really like seeing about this is I hope it encourages these companies that are out there to go to the capital markets and utilize the capital markets as a way to raise capital, and then something like this can happen. So hopefully it encourages that, and, the really great opportunity to be in the capital markets and raise capital that way. So will we just see a lot more of this now with that bill passing?
There's potential. I mean, you could also see, maybe not a huge takeout like this, but you could see mergers as well, right? And then there's a number of different companies that are working on, obviously, as the, legislation comes out, working on solutions and working on their own products. So there could be, lots of companies sort of jockeying for position, and with, some will obviously have breakout earnings.
Yeah, absolutely. Okay, we're going to talk about Robinhood. One of my favorite topics. So Robinhood, when we talked 2 weeks ago, we anticipated that Robinhood would be going public. It did just as we had anticipated, and it's been trading for about a week now. There's a lot that's happened this week, so I want to ask you what you think about the week, and then we'll talk about where it stands today. So tell us about the big IPO. What happened?
Well, I mean, when it came out, it was obviously, it took a long time to get it up trading on the first day there last week. But then when it did, it immediately started to drop. And of course, there was lots of media talk that night about, being kind of the worst IPO of its size in history, and, yada, 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 and so on and so forth. And then it seems like, just en masse, all the Robinhood stock traders decided to come in, and it's become a meme stock now. And, had a fairly strong week this week. It's pulled back a little bit from its highs, but it had, a huge week. And, if you had bought it on the IPO, even though you missed the huge run up in the past, you still would have had a nice return.
Yeah, so I think its IPO price was $38 US. I looked earlier today, it was sitting around 57.69. So it's a pretty good week so far. The one thing that I found interesting, I mean, first of all, let's just remind people what a meme stock is. A meme stock is a stock that is fundamentally, it moves in tandem with online groups that attempt to move it, right? I mean, is that the easiest way to explain it?
Yeah, exactly. Yep.
So the funniest part is that, they've done, the meme stock came to life really on the Robinhood app, and now Robinhood is in itself a meme stock. So it's an interesting full circle turn of events for them. On Thursday, the stock, which was yesterday, the stock did struggle a little bit when early investors in it filed to sell nearly 100 million shares of their Class A common shares that are currently valued at around $5 billion. I don't know. How do you think about this? It's kind of funny that you go public. I mean, going public sometimes really is the reason behind it, is this ability to exit and that liquid ability. But, you've been trading for a few days and 100 million shares from early investors are trying to get out. What do you think about that?
Yeah, just 5 billion here, 5 billion there. What's that with billionaires, right? Yeah, obviously, as an investor, that makes you nervous that, oh, hey, founders are going to sell. But obviously, that's part of part of why we have capital markets, is to provide liquidity. And there's been some investors who have been in Robinhood for a number of years with, limited liquidity. So, I guess they're following all the rules that they need to. They filed that they could sell, and, doesn't mean that 100 million hits the market. Doesn't mean it hits the market one day. But you have to be aware that that's there. And I mean, that's something that happens all the time in capital markets.
Yeah, I think that's a fair point. And I think, we've also talked about the amount of capital that Robinhood has had to access very quickly. To be fair to some of those investors, they should maybe get their payday. I think I read somewhere that the two founders of the company, their estimated holdings, because they have escrow periods of when they can sell leading up until 2025. And they're estimated, depending on this is all forecasting, but it's something like $14 billion, their joint holdings. So good for them. Okay, let's talk about some CSD issuer news. As always, lots going on. One thing I wanted to talk about, we haven't talked about a gold producer in a while, a gold exploration company, Asante Gold. It just completed a $80 million raise to finance the acquisition of another exploration property or mine, the Bibiani mine. And they also announced, so they're based at, most of their exploration, their mining is done in Ghana. And they also announced that they plan to co-list their shares in Ghana, which I think is so great, especially some of these countries where all this exploration is happening. For the ability for the locals to be able to invest, locally on some of these projects. So You've talked so much about gold over the past few months. I wanted to bring this up just because, you know, for the middle of summer, an $80 million raise is pretty decent. What do you
Yeah,
think?
it is. It's quite decent, and from what we had heard, that it wasn't a struggle to get there. They seemed to raise it quite easily.
Yeah. Yeah, it seemed like actually, well, when I looked a little bit further, it actually, I think it was just a few strategic investors. But still, it's so great to see that kind of number, in these mining projects. They're a great issuer of ours, and really like the team behind it, really skilled team, really neat project. So congratulations to them on that kind of a raise. I'm sure that they'll have a great year ahead of them with what they get to do. We're also going to talk about our celebrity sighting this week. Actually, but our celebrity sighting this week, we're going to talk about the one and only Justin Bieber. Well, okay, it's not exactly related to Justin Bieber, but I just had to make that bridge to the Biebs so that the CSC could be associated with him. So I took liberties there. But a company of ours, Graph Blockchain, announced their acquisition of a company called The New World Inc., which signed on the designer from Drew House. So Drew House is Justin Bieber's is his brand of sweatshirts and hats and whatever. So Gian Piero D'Alessandro, he's going to be creating non-fungible tokens for them. We just keep seeing this in the market. I'm really curious. There's so much hype around the creation of the NFTs, but I'm just curious to see how it's going to play out. I mean, is this something that people are going to really get into and start collecting? Have you looked at any of these issuers that are in the NFT space, Bruce?
We have, but very limited. It's because it's so new. We'd rather kind of stand back and just see how it all evolves before we actually, are able to analyze it and participate.
Yeah, it's pretty tough. I mean, and we see this obviously, Bruce, you have gone through this over the past few years with the amount of new sectors coming to market, the emerging markets. That's the biggest struggle in the beginning, when you say, is the valuation process, right?
It is, yeah. Valuing, new sectors and new companies are always a challenge, and those goalposts continually move as well. So what might be the valuation today isn't ultimately the valuation down the road, and that's from a investment standpoint and trying to value that, you never know when that shift is going to take place, and so you have to be on top of the sector and on top of trading and valuation of that sector.
Yeah, I've talked to so many brokers and advisors, and they just say it's just the toughest part, right? Is there's lots of opportunity to invest, but making sure that you guys are kind of what's a good deal and what's not. We're going to finish off with a new issuer that came to market. Welcome, Zoglo's Incredible Food Corp. They started trading with us on, I believe, July 26th. They're a plant-based food company which offers nutrient-rich plant-based appetizers, veggies, and meat substitutes. And we've talked about this before. I think this part of the market is really opening up, and we did a plant-based forum. And they said, look, the real disturbers in the space are going to be kind of the easily accessible food in the plant-based. So if you can, put together a platter, or if easy appetizers, that's going to be the real disruption within the sector. So we're starting to see more and more of these come to market. Welcome, Zoglos. We're excited to have more of you guys here in the sector. It's a great sector and thriving really well. So welcome to them. Bruce, what are we going to think about going into next week?
Well, the biggest thing that we're watching is this continual rotation that we see in the market. So watching breadth numbers to figure out whether or not we're starting to see that reacceleration in, kind of the small and mid caps, or if we're, heading towards the more defensive utilities and staples. So that's what we're watching.
Sounds good. Well, listen, you have a great weekend. I think I'm being joined next week by your wonderful colleague, Jordan Ewell. So we will miss you next week, but always love having Jordan here. So have a great weekend. Have a great week, and we'll talk to you soon.
Thanks. Same to you.
Thanks, Bruce.